Hey, it is 12 noon on Wednesday, which means it's time for this week's episode of Ask the Instructor. My name is John Chrisman. The show is brought to you by the Tampa School of Real Estate. We're here every Wednesday, 12 noon Eastern Time, to help you understand the technical side of the real estate industry. And what we're talking about today is what's known as Lien Priority. And Lien Priority, it might not be the most exciting topic. We were just talking before the show. I was like, I wonder if anyone's going to be interested in watching a video on Lien Priority. But if you're trying to pass your real estate exam, I actually just got off the phone with one of our students that had some questions about the Lien Priority, and they had just taken their exam and they were unsure about the Lien Priority and what actually comes into play. And this is a topic that not only have we heard from students just recently, just today, someone called in asking about seeing Lien Theory, Lien Priority on their exam, but this is something that we've known for as long as we've been teaching this course, how important that Lien Priority really is. It's in multiple portions of the course, so this is an extremely essential exam topic that I could basically guarantee. I can't guarantee, but as close as I could get to guaranteeing you're going to see it on your exam, you're probably going to see this on your exam. So if you're taking your exam, and whether this is your exam to get your sales associate license or your exam to upgrade to your broker license, again, you're probably going to see Lien Priority in there in some way, shape, or form. And this is something that's a little tricky because it goes against your common sense. Your common sense might tell you one thing if you don't understand the laws that go behind Lien Priority. So that's what we're talking about today. Really excited to bring this show to you. I'm always excited about anything real estate related, even if it is something like Lien Priority. But look, even if you don't find this the most exciting, if you're trying to pass your real estate exam, lock yourself in, tune yourself in, get ready, because today we're talking about Lien Priority on Ask the Instructor. My name is John Chrisman. The show is brought to you by the Tampa School of Real Estate.
You are watching Ask the Instructor. Absorb the knowledge. Become the expert.
Hey, welcome back to this week's episode of Ask the Instructor. My name is John Chrismo, also known as The Instructor. Some people call me John, other people call me the guy from the videos. Whatever you want to call me, let me help you with Lien Priority. That's what we're talking about today, understanding what liens are most important. And again, this is a very essential exam topic that comes up very often. So let's dive right into this here. And also we're live on Facebook as well as YouTube. So if you got questions or anything like that, drop that in the chat. I'll help you out with any questions that you have. Drop those in the chat. If otherwise, just let us know where you're tuning in from. If you already got a real estate license, if you're studying to get your real estate license, if you've maybe been thinking about getting your real estate license, let us know in the chat so we know who's watching here and we know how to kind of structure what we're talking about. But let's get right into Lien Priority. Now, with this word lien, what's essentially going on? Well, first let's just talk about what a lien is. And what I like to remember is a legal interest. L for legal, I for interest, the first two letters in lien, a legal interest that basically gets recorded in the public records, that somebody has a legal interest in your property. And some of the liens you might already be familiar with, maybe property taxes. Mortgages are another type of lien. We could have vendors liens, construction liens. The list goes on and on. We could list off quite a few of these different, even just categories of liens, not even get into specific types of liens within these here. But there's a lot of different legal interest that would be recorded in the public records. Because, you know, what happens if you don't pay your property taxes? You don't pay your property taxes, not immediately, but eventually you're going to lose your property if you don't pay the property taxes. That property will be foreclosed on for non-payment of property taxes. You don't pay your mortgage payment. Same thing that occurs. You don't pay your mortgage payment, you're eventually going to get foreclosed on for non-payment of your mortgage. mortgage. So that's essentially what all these liens are there for, that somebody has a legal interest. They don't necessarily have the ownership of the property, because in Florida, we subscribe for mortgages to the Lien Theory concept, and with Lien Theory, that means you get your ownership or your title right away when you own property, but what the bank uses to secure their interest would be a mortgage lien. So they would use a mortgage lien, and what that mortgage lien is, again, it's a legal interest that gets recorded in the public records. They might call that constructive notice. Constructive notice is when you're recording something in the public records so the world can know, as the definition goes. So basically anybody that looks in the public records, they could see that there's a legal interest for this mortgage company. So that's basically what liens do. It's recording some sort of legal interest in the public records, and you could search these things and see the legal interest that exists against a property in the public records. Now, a lien, what I like to think of ultimately for what is the main topic of today, which is the priority of liens, is that liens, if we just flip around the E in the end, it's going to spell line. And that's what liens are doing. They're waiting in line. Liens are waiting in line to be fulfilled, to be taken care of. So imagine like any other line you've stood in before. Maybe you're at the grocery store waiting in line. Maybe you're at an amusement park waiting to get on some sort of ride and you're waiting in line. Maybe you're wherever lines are. There seems to be lines everywhere you go. So when you're waiting in line, now you know how lines work, that you show up, you get at the end of the line. And this is going to be ultimately what's really important for understanding lien priority. But first you got to understand this line concept, which I'm sure you are already. You don't see a line and get to automatically go to the front of the line. Now we're going to talk about the special types of liens that actually do have that VIP, whether you want to call it fast pass or whatever it is, privilege to be able to cut the line. But other than that, liens are waiting in line. And what ultimately determines the priority for most liens, we're going to talk about some specifically that have a different set of rules to them, but for most liens, it's whoever is in line first. You get in line first, you're first in line, you're waiting for, something to be released, a movie to come out, or you're waiting for some, Black Friday deal and you're camped out outside of a store or whatever the case may be, you're waiting in line, and whoever's in line first is the first to get satisfied. And that's how liens typically work. And now, some misconceptions about this, and again, this is where it could go against common sense, is the value of these liens. And the value is actually irrelevant for any type of lien priority. There are some special rules we're going to talk about in a few minutes that apply to certain types of liens that determine the priority. But ultimately, liens are determined, the priority, by when they were filed. And what we call those are going to be known as junior liens. So we're going to talk about junior and what's also known as a superior lien. But junior liens are based on the date, and whoever's first in line is the first to get satisfied. So the first lien in line is the first one to get satisfied. And that's, again, how junior liens work. Look, we're going to take a quick commercial break, but when we come back, we're going to talk about superior liens. We're going to talk about general versus specific liens. We're going to run through an example of determining this lien priority. But first, we're going to take a quick commercial break. We'll be back in less than 60 seconds. Stick with us. I'm John Chrismo. You're watching Ask the Instructor.
The most powerful tool to study for your real estate exam is the Question Simulator from Tampa School of Real Estate. We've used our years of experience in preparing students for the Florida real estate exam to bring you the most powerful exam study tool available. In the Question Simulator, you'll be able to go directly to a particular unit so you can focus on the sections where you need the most practice. We have also included the percentages of each unit so you know which units are the most important for your real estate exam. Every question will immediately give you detailed feedback, which is almost always more important than the question or the answer themselves. After completing all the questions in a particular unit, you can go through question by question and review any that you've gotten wrong. You could also print out a report at the end of each quiz. The Question Simulator from Tampa School of Real Estate is 100% mobile compatible, so you can practice with test questions anywhere you have your phone with you. Enroll now at questionsimulator.com and get ready to pass your exam.
Hey, welcome back to this week's episode of Ask the Instructor. My name is John Chrisman. The show is brought to you by the Tampa School of Real Estate. We're here every Wednesday, 12 noon Eastern Time, helping you understand the technical side of the real estate industry. And what we're covering today is something you might not see too much the importance in the real world. This definitely is very applicable in the real world. Basically, every property is going to have some sort of lien on it, even if it's just a property tax lien, but usually there's multiple liens against a property at any given point in time. So this is a very real world concept, but even more so important, I would say, for your real estate exam, because whether or not it comes up in the real world where you have to really understand this lien priority is a different story. You pay your property taxes, you don't have to worry about your property tax lien. You pay your mortgage payment, you don't have to worry about your mortgage lien. You comply with all the terms of any of your liens, and you make sure people are paid. You don't have to really worry about lien priority. But this is something that you do want to understand, this lien priority, at least for your real estate exam. And again, it will come up on every property in the real world. Every property has liens on it. So we already kind of talked a little bit about what the lien is. It's a legal interest that's recorded in the public records. And what the liens are doing are they're waiting in line. And it's just like a line that you might run in anywhere lines are sold, anywhere you might find a line. That's basically the same way liens work. But the liens that are based on date are called junior liens. So junior liens are based on the date they were filed. And some examples of junior liens include a mortgage. That's probably the most common, I would say, junior lien. We have vendor's liens, which a vendor's lien, so this term vendor is somebody who sells something. And if we're talking about a property, what's being sold is the property. And our vendor is the giver of what's being sold. So this is basically a seller's lien. That's a big one that people all the time forget what a vendor's lien is. That's a lien from the seller. The seller is the vendor of the property. They're the seller of the property. And they might put a lien against the property if they're loaning out money on the property. So if they're doing what's known as a purchase money mortgage, you might remember that term if you've already taken the course, the purchase money mortgage, that's secured by a vendor's lien, or the lien coming from the seller. That would also be a junior lien. It's really just like a mortgage, except for it's coming from a seller rather than coming from some sort of mortgage lender or bank or whatever the case may be. Now, some additional liens that might be a junior lien, it's really everything that isn't a superior lien. So let's actually cover that, the superior liens. And these superior liens, these are essentially our VIPs, our very important liens, the VILs, I guess we could call them. And these superior liens, there's three, and only three, that are always considered a superior lien. So number one is going to be property taxes. And this is anything about lien priority right here. Knowing that property taxes are the number one superior lien, that more than anything is probably the most important thing to know about lien priority. That property taxes, nothing is a higher priority than property taxes. That is the most important lien. If you stop making payments on anything, the last thing you want to stop making payments on or paying is your property taxes, because a property tax lien is more important than any other lien. And we'll go through an example of how these lien priorities basically fall into place here. But property taxes are number one. Number two are special assessment liens. And special assessments are going to be one-time property taxes. And the common example from typical exam questions with a special assessment are the ones about repaving a street in front of a property. You might remember doing that math from the course, or maybe you saw that back when you took your real estate exam. Paving the street in front of your property, that would be a special assessment lien. And a special assessment lien, again, is just really basically a one-time property tax. But very similar to the property tax, except for the property taxes are there year after year after year after year. You get new property taxes. Special assessment, that's just a one-time tax. And our third superior or VIP lien is going to be estate taxes. And the estate tax, this is also known as the death tax. When they tax you for dying. They don't want you to die because you can't pay taxes anymore when you die, so they tax you for dying. That's the world we live in. So that's called the estate tax, and that would also be a superior lien. The only tax that is not a superior lien is IRS or income taxes. And the IRS, other than maybe a deduction you get, has nothing to do with your property taxes. Property taxes are at the local level, whereas IRS taxes, at least in Florida, that's really just the federal level. That we have IRS taxes, that we have income taxes, that we would have maybe an IRS lien. But that would just be a junior lien. That is actually the only tax, our IRS tax, that's not a superior lien. Any other tax would be a superior lien, where basically these are the VIPs. They essentially have this whole, fast pass or VIP pass or whatever way you want to think about it. Normally liens are waiting in line, and the first person in line, whoever's in line first, is the first to get satisfied, the first one to be taken care of, the first one that's really has the most precedent, that's the most important. But that's only if we're dealing with junior liens. When we get a superior lien involved, the property taxes, they walk in and they go straight to the front of the line. Special assessments, they would walk in and go straight to the front of the line. Unless there's already property taxes, then they're going to be second in line behind property taxes. And then estate taxes, same deal. They go straight to the line except for if there's already property tax, special assessment, or estate taxes. And that's why you'll notice here that I numbered these three. 1, 2, and 3. Whereas over here, I didn't put any numbers on here because over here, with junior liens, it's the date that determines the priority. So whatever lien is there first is the one that is the highest priority of the junior liens, but they're always going to be secondary to a superior lien. Superior liens automatically go to the top of the list, and again, that most important one, more than anything that you're most likely to be tested on, is property taxes, because nothing ever beats property taxes. So if you remember playing, rock, paper, scissors, and if this were that one thing that always wins, property taxes always win. They always are automatically at the top of the lien priority list because they are the most superior lien more than anything. Or at least that's the way it works here in Florida. We're going to take a quick commercial break. I see we've got some questions coming in over on Facebook. We're going to take a quick commercial break. I'm going to take a look at these. We'll be right back in less than 60 seconds. I'm John Chrismo. You're watching Ask the Instructor. Have you completed your post-licensing education yet? Look, I know you're probably thinking, hey, it's not my renewal deadline, I don't need to do post-licensing yet, but look, here's why you want to do post-licensing as soon as you've got your real estate license, as soon as you're able to take post-licensing. It's not just another course about arbitrary laws that you're never going to use again. It's about real-world, usable topics that'll help you grow your real estate business, to help you take it to the next level. Look, let me ask you this one question. If this course helps you close just one deal, if you get one extra deal from post-licensing, is it worth the investment? I'd say it is. We get paid pretty well, so one deal means a lot of money. Check out postflorida.com. That's postflorida.com for the full details about post-licensing. Hey, welcome back to this week's episode of Ask the Instructor. My name is John Chrismo, and this show is brought to you by the Tampa School of Real Estate. We're here every single Wednesday, 12 noon Eastern Time, to help you understand the technical side of the real estate industry. And what we're talking about today is something very important for your exam, is lien priority. And lien priority, this is not only just out of a very heavily tested section. I'm pretty sure this one's out of property rights, which is like 8% of your exam. And it actually comes up again when you talk about mortgages in the course. So this is, again, pretty much something that's basically, without me guaranteeing it, it's basically guaranteed. It's as close to guaranteeing it's going to be on your exam as I could legally say. Although it might not be on your exam. Maybe you just have an exam where you don't see one of these questions, but that would be extremely likely. I'd probably put money on it that you're always going to see a question somehow involving liens on your exam, and it's usually going to be about lien priority. Very important concept for your exam, and also a good thing to know for the real world as well. Maybe not as important for the real world as it is on your exam, but maybe it is. Depends on what you're doing, what type of transactions you're involved in. This is something that you want to be careful with as a real estate professional regarding liens. This is something where you want to default to a title company or an attorney whenever we're talking about the quality of a title. Really, we just want to understand the basics of these here, but we never want to give an opinion to title, to the ownership, to the quality of the title. That's always something that needs to be done by an attorney, and we would always recommend that they purchase title insurance as well in case there is any sort of issues with the liens or with the quality of the title, other sort of clouds that you might have in the title or anything like that. And that's why I say this is probably more so important for your exam, because when it comes to actually practicing real estate, we don't want to really touch on this topic, at least not any point to where we're getting into opinions of value. If they're asking us a question like the exam would, well, what would be the most important lien? Well, that's always the property taxes, but consult your attorney for any more specifics, or purchase title insurance, but always pay your property taxes. We're never saying don't pay anything on here, because ultimately any one of these can cause a foreclosure of a property. It's just what type of process that's going to ultimately look like, which again, that's more in the real world, the skill set and the professional expertise of an attorney that would get involved at that point here. But let's get back into exam purposes of this, because again, that's where this is really going to be the most important for you as a real estate professional, is being able to pass your sales associate and broker exam when they ask about lien priority. And again, most important thing, if you take away one thing from today's episode at all, it's right here. Property taxes are number one, numero uno. Most important. More than any other lien, property taxes have the ultimate precedence that are always going to be first in line that we're talking about here. So I want to run through, and we'll just put down here basically anything else for our junior liens. So our junior liens are basically everything that's not a superior lien. And I'm going to leave these different types of liens that are up here. But I also want to go through an example. And I like to lay these out with a number line. So let's say you bought a property back in 1999. So you bought a property in 1999. Here we are in 2019. And when you bought the property back in 1999, you took out a mortgage, but today that mortgage has a balance. Let's see, you're 20 years into this. Let's say you got $10,000 left on this mortgage. So there's our mortgage from 1999. Now let's say in 2005, somewhere maybe around here, you took out a second mortgage against the property. And this second mortgage, you took it out, and today it currently has a balance of $190,000. And so with property taxes, a slightly unrelated topic, but as you can see with this ties into a lot of portions of the course. It talks about, with mortgages, so that comes up again in the mortgage chapter, but also with property taxes. So if you have a lien on your property for property taxes, or really what I should say is if you own property, you in Hillsborough County in Florida, you have a lien on your property for unpaid property taxes. How do I know that? Because property taxes aren't payable until November 1st. And what they do every year on January 1st is they're going to place a lien. Let's say you got like $4,000 in property taxes. And they put that there on January 1st of this year. Now that doesn't mean that you're behind on your property taxes. That's just telling you what this year's property taxes are. So on January 1st every year, your property is going to get assessed. So that property gets assessed on January 1st, and let's say that bill again is $4,000. There's nothing you could do about that until November 1st. Now you might say, John, I pay my property taxes monthly as part of my mortgage payment. You could very well do that, but you're not technically paying the property taxes, at least not yet. What you're doing when you're paying your property taxes is part of your mortgage payment. That's actually going into an escrow, or also known as an impound account, an escrow or trust account essentially, that the mortgage company is holding in trust, and it comes all back to lien priority, the reason why a mortgage company would want you to do this. So you might pay 1/12 of this $4,000, 1/12 of this every single month as part of your mortgage payment, but that goes into an escrow account, and then when the property taxes become payable, which again isn't until November 1st, that's where that money would then be used that's set aside to pay the property taxes. But basically, those 10 months out of the year from January 1st until October 31st, you're basically guaranteed to have a property tax lien against your property. It's not a bad thing. It's just there to be, again, the purpose of the liens, a legal interest that's shown in the public records, the constructive notice, the other term they might use for that, to show that there's unpaid property taxes on the property. Because what's important to know there is if this property gets sold today, let's say it closes today, November 1st, the buyer that owns the property, or whoever owns the property come November 1st, is going to be responsible for the entire year's worth of property taxes. So that's why this lien gets assessed on January 1st to say, hey, this is what the unpaid property taxes are. And that lien's going to sit there until November 1st. At the very earliest is when that could be paid. So that's how the property tax liens essentially work. They get placed on there every year. Now the question on your exam maybe, and again that's not going to be visual on the exam. Nothing on your exam is going to be graphical or visual. It's all going to be word-based questions. And the question might ask something along the lines of which of the following liens has the highest precedence or is the most important, or would be, I don't think they would use the phrasing first in line, but that's ultimately what they're asking here. What is the highest priority lien? Which one is first in line? And you've got a mortgage from 1999 that currently has an outstanding balance of $10,000, a mortgage from 2005 that currently has an outstanding balance of $190,000, and a property tax lien from January 1st of 2019, which has a balance of $4,000. Which one is the highest priority? Now, based on our junior liens here, which that's what our mortgages are. These mortgages are juniors. That's a junior lien. This one's a junior lien. The only one up here that is a superior lien is property taxes. Now, really all we need to know is that we have a property tax lien. It doesn't matter how much it is, but the fact that we have a property tax lien, real easy to get the answer. We don't need to know the dates. We don't need to know the dollar amounts. Whenever we have a superior lien, especially property taxes, they are automatically the most important. So it doesn't matter that this mortgage here has been waiting in line for 20 years. Property taxes, again, they get to cut the line. All of these VIPs or these superior liens, these get to cut the line. The junior liens are based on date. So really, if we wanted to number out the priority here, number one would be our property taxes. Now, they might ask you, I don't think it would get this involved, but in case it does, this is real easy once you've got this all figured out here. What is the order of precedence, or what is the proper order of these liens? So number one would be property taxes. Because they're property taxes, that's the only thing that matters, is because they're property taxes, they're automatically number one. Same thing goes for if you see special assessment or estate taxes, and if you do see multiple of these, I don't think you would, but in case you do, it's just that 1, 2, 3 priority. Property taxes would always be 1, special assessments would always be 2, estate taxes would always be 3, and then we have all of our junior liens based on the date. So here's property taxes, number one, because they're property taxes. Then number two is going to be our 1999 mortgage. This dollar amount is irrelevant. What matters is the date, because again, this is a junior lien. Property taxes are number one because they're property taxes, and then if we don't have any other superior liens, then we move on to our junior liens based on their date. And so really this $10,000 mortgage, or the mortgage with the $10,000 outstanding balance, has been waiting in the line the longest. They've been waiting in line for 20 years. This property tax lien just showed up. Doesn't matter. The property taxes automatically get to cut in front of this mortgage that's been waiting there for 20 years. So that's number one. Then our mortgage is based on date. So number two would be this $10,000 outstanding balance, and then number three would be the $190,000 outstanding balance. Now, why this might go against common sense, you might think, and this is what they're trying to test you on with this exam, is whether or not you know that the dollar amount is going to be irrelevant. And that's why they threw the dollar amounts in with this example. That we've got this $190,000 mortgage, but even though this one is the highest value lien, the highest dollar amount lien, that means nothing for lien priority. What matters for lien priority is number one, superior liens, and then number two, all of our junior liens based on date. The dollar amount is completely irrelevant. We didn't need dollar amounts up here at all. We really didn't need to know that the property taxes were $4,000. It doesn't matter what the value of the property taxes are. They're always number one because they're a superior lien. And then again, our junior lien's based on the date. So here we've got second junior lien because it was from 1999, and then we keep moving along this timeline once we move on to these date-based mortgages. If we had maybe a construction lien here from 2001, maybe you had an addition added onto the property in 2001, but you never paid the contractor, then you'd have a construction lien here, which would be number 3, and then this $190,000 mortgage. Again, we base it on the date. So you're just following along. If you don't have any superior liens, if there isn't any property taxes, then this one would be number 1. But because we have property taxes, they automatically get to cut the line. They have the fast pass or the VIP. The rules don't apply to them. They walk in there, walk right to the front of the line, kick everyone out of their way, and they become first because they're a superior lien. That's how superior liens work. Now let's add a little bit to this. Let's say that this $190,000 mortgage you've defaulted on, that you're having trouble keeping up, 2005 peak of the housing bubble and everything like that, and you've refinanced the property and took out this second mortgage against it, and you borrowed this $190,000 out of the property because the value was inflated because of the market, and now you're left in a tough spot and you're having trouble making payments on this. This mortgage from 1999, even though it has a lower dollar amount, still takes precedence. But something that could occur here that would change the rules, of this date-based system is what's known as a subordination agreement. Sub, like a submarine. And what does a submarine do? Well, a submarine goes under. So a subordination agreement would be where this $190,000 mortgage holder, the lender for this $190,000 mortgage that's having trouble getting you to pay, maybe you're 100% up to date on your payments on this one because the payments are much lower and you're paying this one first because that's your first mortgage and that one's more important. And you're right until this lender with the $190,000 mortgage contacts your $10,000 mortgage and says, hey, look, I've got almost $200,000 outstanding here and they're defaulting on the mortgage. How much is it going to cost me for you to subordinate me? Which what subordination means is this lien that is number 2 is going to step down and let this one, that's going to basically go behind this one, that's going to let this one cut in front of them. Or essentially basically say, hey, look, I'm going to get in line behind you. I'm going to let you subordinate me, and I'm going to get in line behind you. Now, this is between the lien holders. This would be between these lenders here if they come to some sort of agreement like this. And it could be where this mortgage is maybe buying out this one, saying, hey, look, how much is it going to cost me for you to take a lower priority because I need to foreclose on this property because we've got $190,000 outstanding and they've defaulted. Are they still paying you? Oh, they are? Okay, well, they're not paying us. So what do we have to do? Let's negotiate an agreement. And that's called a subordination agreement. Let's negotiate a subordination agreement. How much do we need to pay you to step down, to step behind us, to get behind us in line? So we're now, aside from the property taxes, a higher priority. Now, the property taxes, they're still first priority, and I don't think the local governments, your local counties, your tax assessors are going to accept any subordination agreements. What they'd probably tell this lender is, hey, you could pay the property taxes. You could pay the property taxes on this property, and that'll clear them away, and that'll clear the way for you to now foreclose on the property. But otherwise, these property taxes would be the most important. So that's, again, where maybe they don't just have to pay off this one, or maybe make some sort of payment to allow them to take the lower priority. This doesn't necessarily make this lien go away. This is just this one going to the end of the line. This lien here, this $10,000 mortgage, would just be going to the end of the line with a subordination agreement. It doesn't do anything about this property tax here. And again, I don't think the tax assessor would accept any subordination agreement. They would probably just say, hey, pay the taxes and then you'll be first in line. If there's nothing else in the way, you pay the taxes, that takes care of everything. And this is one of those issues that with a distressed property, when you've gone into default, when you're maybe potentially facing foreclosure and whatnot, and all these things that factor in with all of this here because of this lien priority. Now, for the average real estate professional, this is way over your head for at least real world wise. Again, this is something where there's an attorney that would be involved for handling this type of stuff. Maybe you're studying for the bar. You're probably going to have to know this a little bit more detailed than what we're covering here on this episode today. But for your real estate exam, they do want you to know this. They do want you to understand this theory of liens, even though you're not supposed to give any opinion of title, and that should only be done by an attorney. But again, you want to understand this here. And as a general ownership knowledge, when you own property, you should be familiar with this lien process to at least know which ones are the most important. And it's good to know that, okay, yeah, this one's more important, so you should pay this one before you pay this one. But again, that subordination agreement, that just changes the rules here. That changes the rules and says, okay, this one's going to go to the end of the line because they've got a subordination agreement. They're going to subordinate themselves to this mortgage, and now all of a sudden this one is the most important, and they're going to move forward with their foreclosure because you haven't been making your payments on it. So that's why, again, this isn't the most practical knowledge for the real world, and that's maybe why a lot of students have trouble with this here, because the real world application of this is much more complex, and again, this is where we get an attorney involved. But for the purposes of your real estate exam, what we're covering today here, what we've talked about for this priority is very essential, very important. If you remember one thing, remember what is the number one thing, and again, that's always property taxes. Property taxes always are the most important lien. All of our superior liens, again, have that VIP pass where they get to cut the line, where they go to the front of the line automatically, regardless of the date, regardless of the dollar amount. And then we have all of our junior liens based on the date that they were filed. And then they're waiting in line. Whoever's there the longest is the first priority, unless we have that subordination agreement. Now, before we sign off for today, I just want to go ahead and address some of these questions that we've got on there. So Kara asking about brokerage activities and contracts. So those are two very important chapters. Those two chapters are 12% each. So, we could spend literally days diving into all the details of those two chapters of contracts and of brokerage activities. So, Kara, what I'll recommend to you, we do have some videos out there that discuss some of the brokerage activities, but for those ones specifically, I would probably recommend either our MP3 or our question simulator, depending on where it is that you're at. If you haven't seen our Pass First Try strategy yet, check that out at passfirsttry.com. We actually now have a recording of our weekend review class. So you can actually access our weekend review class anytime, anywhere, on demand. You just log in from your computer, from your phone, from your tablet, and you can go right through our weekend prep class. So a lot of our students have been finding that really useful, so that's a great tool as well. But before you really sign up for any of these, I would call our office, because we've got advisors that are going to help walk you through finding the right tool depending on what it is that you've done already for studying. So based on what it is that you're doing, you might not need all of our exam prep tools. There might just be one thing, and maybe that weekend prep class is the best thing for you, or maybe that's going to be the question simulator, and maybe it's the MP3 auto review, or maybe it's a combination, again, depending on what it is that you've studied, what you're struggling with. So let our advisors help you out and be your guide through this to help get you ready to pass your exam. We've got our whole Pass First Try strategy if you want to try to go in and understand our philosophy on your own. That's at passfirsttry.com. But again, I'd highly recommend calling one of our advisors, 813-333-2676. Other than that, it looks like, basically everything, just some general comments on here. Yeah, Kara, you already have both of them. Call the office and we could give you some more direction on that as well. When you're a student of us, it doesn't just end once you go sign up for a course with us. It's not like you sign up for a course with us and you're on your own at that point. When you're our student, you are our student. So let us help you out with anything in particular that we can. And when you're struggling to try to figure out what it might be, give us a call and we'll help you out. And next week, on next week's Ask the Instructor, we'll do some that maybe touch on some of that contract stuff and brokerage activity. I think brokerage activities, a big part of that chapter is going to be on escrow. That's one of the very important topics on the entire real estate exam. There's probably, again, I can't say what's exactly going to be on your exam or what is on the question bank or anything like that, but probably one of the most tested on topics out of anything is going to probably be escrow. That's a very large portion of that brokerage activity, that 12% chapter. So, Kara, I would give you that advice right here, right now, is the brokerage activities. Go into the escrow, and I'm pretty sure we've got a video somewhere on our Success Center for escrow as well. Escrow is really probably the biggest part of that chapter. Contracts, there's a lot of things that goes into a bunch of different routes with that, so not really something I could probably say right off the bat like that, but escrow would be a really good place to start out with if you don't really already have a great understanding of that. But give us a call. We'll help you out. Again, 813-333-2676. Whether you've already taken the pre-licensing course or you still need to take the course or whatever the case may be, maybe you've taken your exam, you've got like a 73 or 74, let us help you. If you're already a student of ours, give us a call. Let us give you some direction on what it is that you should be doing to get over that hump, get over that 75%. We want to see you guys successful because we want you to tell everyone that is thinking about a real estate career that it would be a mistake to use anybody but Tampa School of Real Estate, just because, again, we care about you guys. We want you to be successful. We want you to be our fans. We want you to be our evangelist out there spreading the good word of Tampa School of Real Estate throughout the entire world. So if you found this video helpful today, make sure you hit the like button. Make sure you're subscribed so you don't miss out on any of these videos. If you want to check out any of our other videos, check out our Success Center. That's tampaschool.com/success, tampaschool.com/success. That's got every video that we've ever had for Ask the Instructor, for State of Real Estate, all kinds of great information that's on there. So I definitely search that for any other videos it is that you want. But other than that, that's about all the time we've got for today. So thank you guys for tuning in. Make sure you tune in on Friday for State of Real Estate. That's our weekly business mastermind that's going to help you understand how to grow your real estate business. Today on Wednesdays, we're focused on the technical side, and on Fridays, it's our business mastermind. How to make money, how to make more money, how to take your business to the next level, how to get the wheels turning in your business, how to find leads, how to hold open houses, all these different topics that are all about building your real estate business. That's on Fridays for State of Real Estate. That's about all the time we've got for today. Thank you guys for tuning in, and I'll see you on Friday. Hey, so if you're thinking about starting a real estate career, it could feel a little overwhelming sometimes. Look, that's completely understandable. That's why we're here to help. If you haven't already, check out our Success Center, tampaschool.com/success, or if you don't even know where to begin, give us a call. We'd love to help you out. We've got advisors standing by to answer any questions you have and assist you in any way it is that we can. Our phone number is 813-928-0106. Again, that's 813-928-0106. Give us a call. We're the Tampa School of Real Estate.
Do you want a career that allows you to be in control? With a career in real estate, you'll get to call the shots. Whether you're looking at starting part-time or want to become the next top agent, a career in real estate makes it possible. Find out what it takes at tampaschool.com. Do you want to incorporate studying for your real estate exams into your busy schedule? Now you can review the key topics you need to know to pass your class and state exams with our MP3 audio review. Simply pop in your headphones or connect to your car to reinforce crucial information while you exercise or drive. Listen to the first unit for free at mp3audioreview.com. That's mp3audioreview.com.
Are you thinking about a career in real estate? Hey, I'm John Chrisma with the Tampa School of Real Estate, and we've helped thousands of people just like you obtain their real estate license. If you're thinking about a career in real estate, give us a call. The phone number is 813-928-0106. Our advisors are standing by to answer any questions you have and assist you in any way they can. Hey, if you're enjoying the show today, which I'm sure you are, be sure to hit like, subscribe, post your comments, share with your friends and family. Thank you guys so much for watching.